Hi everybody, it's me, Teresa Perrin. I wanted to discuss Helbiz and their earnings with you. Guys, they are making really great improvements, and I think that the stock is severely undervalued at this price. I'm not sure why it didn't explode in after hours. However, I do think that we are going to see it make substantial moves to the upside very soon. Please remember, nothing I say is financial advice. Always do your own DD. And if you haven't already, check out my video on 5 stocks under 50 cents to talk about other reasons why I like Helbiz. All right, so Helbiz third quarter revenue was 3.7 million. Their third quarter loss was 24.6 million. They are up 30% in the first 9 months regarding revenue. The first 9 months, the QAPUs are up 22% year over year. Quarter 3 adjusted net loss improved by 50% year over year. Year over year decrease in quarterly mobility cost of revenue, it was down 20%. And the quarter 3 adjusted operating expense improved 34% year over year. So, the net loss improved by 50%, like I stated, is proof of continued effective profitability driven by cost optimizations. Now, this right here goes over a lot of the financial highlights. The CEO, Salvatore Paella, says, "We believe that we are driving toward profitability on many fronts by enhancing our current service offerings, optimizing our cost structure, and integrating new businesses. Even with softer third quarter numbers, our performance year to date is solid, and we are confident we can exit the year with momentum. Third quarter top line was impacted by challenging economic conditions and the strong dollar, which devalued our substantial euro revenue. I want to thank our team for their relentless effort, commitment to create more value, and focus on operating profitability, as evidenced by the strong reduction of the adjusted net loss in third quarter numbers." Now, financial highlights. 9-month revenue of 11.3 million, up 30% year over year. Ongoing cost optimization, third quarter adjusted operating expenses, which exclude impairment of assets, were 16.1 million, down 34% year over year. Improvement of bottom line. Third quarter adjusted net loss, which excludes impairment of assets, was 14.2 million, down 50% year over year. Fortified access to capital, third quarter proceeds from issuance of financial instruments amounted to 17 million. Mobility. They signed a merger agreement with Wheels, and they're expecting immediate synergies and cost optimization in the U.S. markets after the closing, which, guys, I believe is going to be this fourth quarter. The first 9-month quarterly active platform users, QAPUs, were up 22% year over year, and QAPUs up 2.6% quarter over quarter. Quarterly revenue of 2.5 million, which was down prior year, partially due to the strengthening of the US dollar against the euro, since the majority of revenue is generated in Europe. Greater operating efficiency drove 20% year over year decrease in cost of revenue. And developed strategic partnerships to extend the reach of mobility services. Media. Quarterly revenue of 1.1 million, up 42% compared to quarter 3 of 2021. 9-month revenue of 4.2 million versus a partial period in 2021. Strong and steady commercialization of media rights, accounting for 59% of quarterly media revenue and 71% of 9 months revenue. Leveraged partnerships to make Italian Serie BKT more available worldwide. And in their kitchen, their quarterly and 9-month revenue was up significantly as customer usage ramps. All right, guys. So as you can see, it was a pretty solid earnings, even though it may not have been what they had hoped for, it still looks like they're making substantial progress, which is what you want to see in a growth company. Now, currently, we're showing the short interest is only 2.74% of the free float, and there's 3,100,000 shares available to short. But guys, something isn't adding up here because of how cheap this is and the cost to borrow being 48.09% with that little amount. Seems kind of funny to me. I don't know. Let me know in the comments below your thoughts. But the short volume ratio is between 30 and 48% in the past 2 weeks, and today was 34.85%. And as you can see, failure to delivers are not an issue at this point. Now, currently, institutional ownership only accounts for 11 total institutions investing in Helbiz, all of which are reportedly long. Now, again, guys, this is the best information that we have. As far as how accurate it is, it's very hard to say because shorts are not required to disclose their position, and this tends to be sometimes weeks or months behind. So, take it with a grain of salt. Again, you use this as a guide. Institutional shares long are 787,793, which is slightly under 1% of the entire float. And insider ownership accounts for 23.64%. There are 15 total insiders. And guys, Salvatore Paglia, the CEO, is constantly buying more and more shares. In fact, I would be very surprised if we didn't see another huge buy coming from him in the next week or two, being reported in the next week or two, as he does tend to buy quite frequently. And hopefully that will trigger a move to the upside when we do see that, as well as I think that, if the market starts to continue showing an upside, I do believe that Helbiz will continue on the path to the upside as well, guys. There was a great article that they put out on top 4 stocks to own to become a millionaire, and Helbiz was actually one of them. And I firmly believe that this company is severely undervalued and that it's a great time to get in at the ground floor. They are, like Mullen, making good strategic acquisitions and moves towards profitability. And I'm a solid investor in Helbiz, and I believe in this company. That being said, it's not a solicitation for you to buy, hold, or sell this stock. Do what you want. It's your money, but I'm telling you why I like it and why I think that it has a potential to make us a lot of money. Anyways, thanks so much for watching, and have a great day.